Welcome back to Investing Talk Podcast. Today, we're going to tackle a company that's, well, it's been on a wild ride this year, Eyenovia.
Oh, yeah.
They've been making headlines,
Absolutely.
but not always for the reasons you want as an investor.
No, not at all. You're absolutely right. We're looking at a stock that's plummeted over 95% from its peak earlier this year.
Wow.
Back then, it was trading around $2.57. But as of December 31st, 2024, it's down to a mere $1.15445.
Ouch. That's got to hurt.
That's a tough pill to swallow for anyone holding this stock.
So for our listeners, Eyenovia, ticker symbol EYEN, focuses on treatments for eye diseases.
Right?
On the surface, it sounds like a promising area,
It does.
but clearly something went very wrong.
Yeah.
I've got a stack of news articles, financial reports, and analyst opinions.
Oh, wow.
Where do we even begin to unravel this investing puzzle?
Well, the biggest blow came from their recent phase 3 trial for micropine,
Okay.
their treatment for pediatric myopia.
Right.
It didn't just fail, it was halted early because it did not meet its primary efficacy endpoint.
Oh my goodness.
In simpler terms, the treatment didn't show the results they were hoping for.
Okay, so the treatment didn't work as expected. That's a big setback for any pharmaceutical company.
It is.
But why was the market reaction so severe?
Right.
A failed trial doesn't always result in a 95% stock price drop.
You're right. A single failed trial, while disappointing,
Yeah.
doesn't usually tank a company completely. However, this failure triggered a chain reaction.
Oh,
Eyenovia had to make some drastic moves to stay afloat.
I see.
They slashed personnel costs by over 70%.
Wow.
That's a massive reduction in their workforce.
Yeah.
They also negotiated a deal to delay debt payments, buying them some time.
Okay.
But they're still staring down the very real possibility of being delisted from the Nasdaq.
So it sounds like they're in a fight for survival.
They are.
Is there any hope left for Eyenovia? Could this be a buying opportunity for those who are brave enough to take the risk, or is it a sinking ship?
It's not a completely hopeless situation. Eyenovia still has FDA-approved therapies on the market.
Okay.
Combi and a clobetasol propionate ophthalmic suspension.
All right.
These products are generating some revenue, though their latest earnings report showed zero revenue for the quarter,
Oh.
which is a definite red flag.
Yeah, that's not good.
Now, some analysts believe that if the company can navigate this financial storm,
Right.
there's still long-term potential.
So a glimmer of hope, but a lot of uncertainty.
Yeah.
Let's shift gears for a moment and zoom out to the broader market.
Okay.
How does Eyenovia's predicament fit into the overall market outlook for 2025?
That's an important point.
Yeah.
It's crucial to remember that while Eyenovia is struggling, the stock market overall is actually projected to do quite well in 2025.
Really?
The S&P 500 is expected to rise by around 10%, driven by factors like strong economic growth
Okay.
and advancements in artificial intelligence.
So even in a bullish market, individual companies can still face serious headwinds. This really highlights the importance of understanding both a company's fundamentals and the broader market trends, right?
Absolutely. It's tempting to think a rising tide lifts all boats,
Yeah.
but that's not always the case in the stock market.
Right.
You need to look beyond the general market sentiment and really dig into the specifics of each company
I see.
before making any investment decisions.
Now let's dive back into Eyenovia's financials.
Okay.
You mentioned their latest earnings report, besides the zero revenue figure.
Right.
What else jumped out at you? What should our listeners be paying attention to?
One surprising element was that they actually beat analysts' expectations
Great.
on earnings per share.
Wow.
However, that zero revenue figure can't be ignored.
No.
It raises questions about the demand for their existing products and their ability to generate sales going forward.
That's a concerning sign.
It is.
It makes you wonder if those FDA-approved products are really gaining traction in the market. Now, before we move on to technical analysis, I'm curious about those cost-cutting measures.
Okay.
Cutting personnel by 70% is drastic.
It is.
What are the potential implications of that move for Eyenovia's future?
It's a double-edged sword.
How so?
On the one hand, it shows they're serious about reducing expenses
Okay.
and trying to extend their runway.
Okay.
On the other hand, such a drastic cut could impact their ability to develop new products, market their existing ones effectively,
Right.
and ultimately achieve long-term growth. It's a risky move, and it remains to be seen whether it will pay off.
It sounds like they're walking a tightrope.
Yeah.
So let's talk about the technical picture.
Okay.
What are the charts telling us? What signals should investors be looking for?
This is where things get interesting. Eyenovia's trading volume has been through the roof lately,
Oh, really?
reaching 348 million shares.
Wow.
That's a massive spike compared to their average volume of around 10.3 million.
Wow, that's a lot of activity. It seems like investors are definitely paying attention to Eyenovia. But is it the right kind of attention? Is this informed interest, or are we seeing a speculative frenzy?
That's the million-dollar question. Looking at the technical indicators, we're getting mixed signals.
Right.
The short-term moving averages, specifically the 5-day and 10-day simple moving averages, are giving us buy signals.
So short-term traders might see this as an opportunity to capitalize on the volatility.
Exactly. They might be betting on a quick rebound or simply riding the wave of increased trading volume.
Okay.
However, the long-term moving averages, the 50-day and 200-day, paint a different picture.
Oh.
They're firmly in sell territory, suggesting that the overall trend is still downwards.
So we have short-term signals hinting at a potential bounce and long-term signals pointing towards continued decline.
Right.
That's a lot for investors to unpack.
Right.
What other technical indicators are you looking at?
Another key indicator is the RSI,
Okay.
the Relative Strength Index, which measures stock's momentum.
Okay.
It's currently hovering around 34.50, which is approaching oversold territory. Okay.
This could be interpreted as a buying opportunity for those with a higher risk tolerance.
So if you're a risk taker, this could be a tempting entry point, but it's crucial to understand the potential downsides as well.
Exactly. Remember, the RSI is just one piece of the puzzle.
Right.
You can't rely on it alone to make investment decisions. It's essential to consider the broader context,
Okay.
including Eyenovia's fundamentals, recent news, and overall market trends.
We've covered a lot of ground here,
We have.
but there's still much more to explore. What else do we need to consider when evaluating Eyenovia as a potential investment?
We need to delve deeper into the specifics of their restructuring plan.
Okay.
What does it entail, and what does it mean for investors?
Good point.
And perhaps most importantly, we need to assess the management team's ability to lead the company through this turbulent period. Do they have the experience and the vision to turn things around?
All excellent points. We'll tackle those questions and more in the next part of our podcast. So let's unpack these restructuring efforts. Cutting personnel costs by 70% is a drastic move. What does this signal to you?
I mean, for me, it's a huge red flag.
Yeah.
To me, it signals that they're trying to desperately cut costs just to keep the lights on.
I think you're right. It really highlights the intense financial pressure they're under. They're essentially buying time to figure out their next move.
Yeah.
The deal they struck with Avenue Capital Management
Right.
to defer debt payments until February 2025 gives them a little breathing room, but it's just a temporary solution.
So for our listeners who might still be holding on to Eyenovia stock, hoping for a turnaround,
Right.
what does this restructuring actually mean for them?
Well, it's a tough position to be in, for sure. On one hand, these cost-cutting measures could be seen as a positive sign. It shows the company is being proactive about addressing its financial problems. But on the other hand, it raises serious questions about their long-term viability.
Yeah.
Remember, they haven't generated any revenue in the last quarter. Can they actually turn things around, or is this just delaying the inevitable?
That's the crucial question, isn't it?
It is.
This is where understanding the company's fundamentals and their future prospects becomes so important.
Absolutely. And this is where analyst opinions start to diverge.
Oh, really?
Some analysts believe that if Eyenovia can successfully execute this restructuring plan, streamline their operations, and maybe even secure some strategic partnerships,
Yeah.
there's still a chance for a comeback.
So there's that potential for high reward if they can pull it off.
Yeah,
But then there's also the very real risk that this is just the beginning of the end for Eyenovia.
exactly. And the stock is incredibly volatile right now.
It is.
As we saw from those wild trading volumes. That means there's potential for big gains, but also for significant losses. It all comes down to how the next few months unfold.
Speaking of volatility, let's revisit those mixed signals we're getting from the technical indicators.
Yeah, sure.
On the one hand, we have those short-term moving averages giving us buy signals.
Yes. Both the 5-day and 10-day simple moving averages are currently indicating a buy. This suggests that in the short term, there might be some upward momentum. It could be driven by speculative trading or those hoping to catch a quick rebound.
But then we have those long-term moving averages,
Yeah.
the 50-day and 200-day, which are firmly in sell territory.
Right. Those longer-term averages suggest that the overall trend is still very much down. They're telling a different story than those short-term averages.
So short-term traders might see an opportunity here,
Right.
but long-term investors are probably staying far, far away.
It's a classic case of buyer beware. This is a high-risk play right now, and it's not for the faint of heart.
Yeah.
You really need to have a strong stomach for volatility and a high tolerance for risk.
We also have that RSI hovering around 34.50. That's nearing oversold territory, which some might interpret as a buying opportunity.
That's true, but it's important to remember that the RSI is just one indicator,
Right.
and it should never be used in isolation. You need to look at the bigger picture, the company's fundamentals, the news flow, and the overall market sentiment before making any decisions.
So if we were to summarize all of this for our listeners,
Yeah.
what would be the key takeaways? What do they really need to understand about Eyenovia's situation?
I think the most important thing is to recognize that Eyenovia is at a crossroads.
Okay.
They are facing some very serious challenges. Financial instability, a damaged reputation after the failed micropine trial, the risk of delisting. Their future hinges on their ability to execute this restructuring plan effectively and regain the trust of investors.
It's almost like they're trying to rebuild the plane while it's still in the air.
That's a great analogy.
Not an easy feat.
It's a high-stakes game they're playing, and the outcome is far from certain. If they succeed, there could be significant rewards for those who took the risk. But if they fail, well, it could be a very costly lesson for investors.
So before we move on, let's go back to that broader market context.
Okay.
You mentioned that the overall outlook for 2025 is quite positive. How might that impact Eyenovia? Could a rising tide lift all boats, even a struggling one like Eyenovia?
That's a fascinating question. A bullish market can certainly create a more favorable environment for companies to raise capital, attract investors, and grow their businesses, but it's not a guarantee.
Just because the market is doing well doesn't mean every single stock will go up.
Precisely. Eyeenovia's fate will ultimately depend on its own actions and its ability to convince the market that it has a viable future. Even in a strong market, investors will be hesitant to put their money into a company that's facing delisting and hasn't shown any revenue growth.
So a rising tide might not be enough to save Eyenovia. They need to prove that they can steer the ship in the right direction regardless of the market conditions.
Exactly. They need to show that they are more than just a speculative play, that there's real substance behind their story.
So we've talked about the failed trial, the restructuring, the financial struggles,
Yeah.
the technical picture, and the broader market context.
Right.
But there's another critical element that we need to examine. The management team.
Hmm.
Who are the people at the helm of Eyenovia, and do they have what it takes to navigate these stormy seas?
That's a crucial aspect. The leadership team can make or break a company, especially one in a precarious position like Eyenovia. We need to look at their track record, their experience, and their ability to lead through challenging times. Let's dive into that in the final part of our podcast.
All right, so let's turn our attention to the people in charge at Eyenovia. Who's steering the ship, and do they have the experience to navigate this storm?
Well, the CEO is Dr. Sean Yanshulev. He's been with the company since 2014 and has a pretty extensive background in ophthalmology and medical devices.
So he knows the eye care space. That's a good starting point. But what about his track record as a CEO? Has he led companies through tough times before?
That's where things get a little bit tricky. Eyenovia has had its share of ups and downs under his leadership. They did achieve some regulatory wins,
Right.
securing those FDA approvals for Mydcombi and the clobetasol propionate suspension.
But then they also had that major setback with micropine.
Yeah,
And now they're grappling with this financial crisis. It paints a mixed picture.
it does. It's hard to definitively say whether he's the right person to lead the company through this turnaround, but his deep industry experience is certainly a plus.
So experience is there, but the jury's still out on whether he can deliver in this situation.
Yeah.
What about the rest of the management team? Are there any standouts?
Well, they brought in a seasoned CFO, John Gandolfo, earlier this year. He has a solid background in finance and has experience with companies in turnaround situations.
Okay, that could be a valuable asset right now as they try to stabilize their finances and avoid that Nasdaq delisting.
Absolutely. Having someone with that kind of expertise overseeing their finances could be crucial in the coming months.
So we've got a CEO with deep industry knowledge but a somewhat mixed track record, and a CFO known for navigating financial turmoil. It's a bit of a mixed bag, isn't it?
It is. Ultimately, their success will depend on their ability to work together, make those tough decisions, and execute their plan effectively.
And of course, they need to convince investors that Eyenovia is worth betting on despite all the risks.
Exactly. They need to restore confidence and demonstrate a clear path forward.
So what does this all mean for you, our listener? What should you be taking away from our discussion about Eyenovia?
Well, I think the key takeaway is that Eyenovia is a high-risk, high-reward investment. There's potential for a comeback, but the challenges are significant.
It's definitely not a stock for someone with a low tolerance for risk.
No.
You really need to be comfortable with the possibility of losing a significant portion of your investment.
Right. You need to carefully weigh the potential rewards against the very real risks before making any decisions.
And if you do decide to invest, stay informed. Keep a close eye on their upcoming earnings reports and any news about their restructuring efforts or potential strategic partnerships.
Those will be key indicators of their future direction.
Great points. And as always, do your own thorough research before making any investment decisions. We're just here to give you the information and insights to help you make more informed choices.
Absolutely. We aim to equip you with the knowledge you need to navigate the complex world of investing.
Now, here's a final thought for our listeners. If Eyenovia does manage to pull off a turnaround, what could that tell us about the resilience of the healthcare sector, even in a volatile market?
That's a great question to consider. It really underscores the importance of looking beyond the headlines and understanding the underlying dynamics of an industry.
Well, that's all the time we have for today's episode of Investing Talk Podcast. We hope you found this breakdown of Eyenovia insightful. If you did, please consider subscribing, sharing this episode with your fellow investors, and leaving a comment. We appreciate your feedback. Until next time, happy investing.